Hello, Maverick traders, and welcome out to your weekly currency room. This is Ankit here, and I'll be breaking down this week price action and most importantly, talk about our upcoming week ahead. Let's get into it. As always, we'll be taking a look at what happened to this markets, take a look at currency analysis, take a look at where the major news events were, what the currency baskets are telling us, and then we'll take a look at some potential setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So looking at last week, again, this was a pretty volatile week if you look at intraday volatility, especially in some of the currencies as well. So, here we are at the end of it. The markets are breaking out to new all-time highs. So we are seeing the market bullishness back in the markets. So at the same time, we have seen that intraday volatility, which we'll take a look at some charts. But that's just the nature of it. With the new administration now, this was the first week for the new administration. And, I talked about last week where there was a lot of expectation kind of built in. And a lot of people were worried that on day one, as it was promised, that there's going to be tariffs, there's going to be a lot of these different things. And here we are at the end of the week. None of the tariffs kind of came in place. And that was a bit of a relief rally for the markets. All those worries were weighing down, and it seems like at this point, it seems to be all talk here until we really see things materialize. As we take a look at the U.S. dollar, so same thing. This was more like buying the rumors, selling the news. So again, nothing really happened with the tariffs, and we saw that biggest drop in this U.S. dollar since August. Again, that was a big drop there, and here we are. It's been a long time that we've seen, that kind of drop in the U.S. dollar. Overall, again, we have been +3 in the U.S. dollar for the last 3 months. So there's a bit of a regime change in the dollar. Now, the yields, on the other hand, they're kind of holding steady. They didn't really fall for the week, but I think it was just a lot of hype, a lot of expectation that was built around these worries and this tariff. So as we didn't see any of that, market took a relief. So broad markets rallied, and we are seeing the U.S. dollar pulling back. Now, the cryptos, on the other hand, stay strong as well. Again, Bitcoin is the one that's outperforming. And that's been the case again for the last few months. So overall, that's been the clearest winner. Now let's just take a look at news events. Again, we had a lot going on last week. Again, starting with Tuesday. Again, with the employment report from the UK, it was okay. The Canadian CPI was lower expectation. And then we go into some of the other numbers. We had the Bank of Japan. They did raise rates last night. I didn't really see a whole lot of fireworks in the Japanese yen, so it was more like a dud on that news, even though they hiked rates. Now, Canadian retail sales was below expectation, and then we're looking at more bigger moves that happened overnight was these services PMI numbers and manufacturing PMI numbers out of the Eurozone and out of the US. So you can see that the numbers were positive out of the Eurozone, and then we actually saw a nice jump in the euro and the pound. And even now out of the US, the number were mixed. But remember, the broader forces were really where it was in play. We had these news events, but the biggest focus was really on tariffs, what happened, actually, and none of those things are off the table yet. But it definitely is, providing a good relief rally, because the longer it's pushed and delayed, maybe they're not going to happen. So that's just a good news for the markets. So let's just take a look at last week review and then take a look at the numbers and see where we are and where we end up. And then here we are. Here's the numbers for this last week. S&P up 1.58. We got the World Stock Index 1.93. Cryptos are up. Gold was up and oil was down. So you can see that this was a broad market rally. Let's take a look at the chart on the S&P and see where we ended. So you can see that the last few days, again, we started off this year quite choppy in this range back and forth. And then here we are in the last few days. We got a nice little big rally here. And again, the way we were sort of looking at yesterday, we had a sort of a confirmed breakout. And then you can see that today that rally is kind of falling back into the range. So the question is, are we broke? Did the market break out, or are we still in the range? I mean, based on today's market close, as if we stay or close below this level, then again we're still range bound. So I would say that maybe the next week the market will again focus on, is it going to rally from here, or is it going to pull back from here? So maybe this is just a pause, but I think this will leave that question mark for next week if there's a continuation or if there's a pullback. Remember, the headlines are still going to move the markets. Any development on tariffs is likely to be perceived negative in the markets. So something to kind of watch out for. Now, if you take a look at the numbers, you can see that the euro and the British pound, they actually did really well with a nice performance, especially the pound. I know kind of surprised because pound was sitting really weak, so getting a nice bounce there. So we'll take a look at charts and see if that's just an oversold bounce, or is that something materially changing. As you can see that with this broad market rally this week, the Aussie and Kiwi, they were pretty strong, and then we are looking at the weakness, the yen and the dollar. So you can see this is a pretty simple picture for a risk-on rally, the markets, where markets were just positive, bullish, and then the risk-on rally. So we saw some of the growth currencies had rally, and then we're seeing the defensive currencies like the dollar, like the yen, even the Swiss franc, they all sort of pull back. And then here we are, Canadian dollar in there as well. Remember, with this whole tariff, it got pushed till February 1st. For Mexico and Canada. So it seems like Canada is more under pressure here, or in talks about these tariffs. So I think that's just going to put a lid on the Canadian dollar here. So hopefully we'll have that resolved and we have a better idea where markets are going. But again, the volatility is the name of the game here. Big percentage move, and again, big intraday moves. We saw a nice 1.5% move in the Canadian dollar, in the dollar CAD, so there's definitely opportunity to be had, but at the same time, volatility is something to watch out for. Now, here we are with the cryptocurrency outlook. You can see where, the Bitcoin sitting at the highest here, and here's the Ethereum as well. So they all are, again, anticipating some regulation change. Again, this new administration is very crypto friendly. So I think that's just going to keep, so far it's just keeping that positive momentum up in this cryptocurrency. Now, let's just go into a market analysis, and then let's take a look at where we are, and then talk about what the charts are telling us. Now, taking a look at our score, again, we are at a +2. I know we just looked at the S&P chart, but like I said, at this point, we are stalling at that level, which means that next week is going to be very important to see which way the follow through is. This is a risk-on rally. So if that turns into a bit of a risk off, then you know that the things that kind of suffered the most this week are likely to have a bit of a rally. So that's what you're dealing with here, with the risk on and risk off. So it's important to kind of keep an eye on the broader markets, because those broader markets are really going to drive the currencies higher and lower. And if we take a look at the bond yields, you can see the bond yields are kind of holding steady. We have the FOMC next week, so I think that is going to be the driver for pushing these yields higher or lower. Remember, they're not expected to cut rates, but it's about the forward guidance is what we're looking for. And in the crypto markets, you can see that, this is a crypto basket. You can see it sideways. But again, if you take a look at Bitcoin chart, it's consolidating against that resistance. So that's the chart that's worth looking at. I think if I have to trade crypto, Bitcoin probably is the best bet over here. Now, let's just talk about the next week's events. And there's a whole lot to go through. Starting Sunday night, we have China number here. But most importantly, we have the Aussie CPI, inflation number out of the Australia. Remember, the Australian inflation number has been holding steady. And that's why we have the RBA that's holding steady as well. So if that number comes up weaker, I think that will put a little bit of pressure on the Aussie here. So something to keep a close eye on. But then take a look at Wednesday. Wednesday is probably my favorite day here, because we have the US and Bank of Canada. There's two rate statements. So the US, the Canada is actually supposed to cut rates by 25 basis points. And then we have the US that's supposed to hold rates. So you can see that, there's that dollar CAD, there's an interest rate differential that's happening here. But we have to kind of see what this statement says, what their forward outlook is, and I think that's just going to drive some of the currencies higher, lower. But there's definitely a potential for a bigger move in both the dollar and the CAD. And then going into the following day, we have the ECB rate statement. Again, they're also expected to cut rates, but it doesn't seem to be, but the euro doesn't seem to be affected by it because that's already known news, and euro is actually acting a little bit stronger. But remember, it's not the cuts that's important here. That's got priced in ahead of time, unless it's a surprise, hike or a cut. That makes a big move. But it's a statement. It's a statement that's going to follow. Is that a dovish statement or is it a hawkish statement? And that's going to be affecting the currency. Then you can see that later on we have GDP number out of the U.S. We got the PCE inflation number out of the U.S. on Friday. So next week is a busy week with pretty much everything. Every day there's going to be a lot of news. So on the top of that, you got to keep an eye on headlines, especially on the tariff news. So with this week outlooks, I think market likely to remain bullish until those tariffs comes along, and I think that's going to put some pressure on the markets. And remember, that's where you got to pivot based on what's really happening in the broader markets. And the market sentiment is very important here, and that could shift on a day-to-day basis, but depending on news and stuff. So I think volatility, we should expect volatility going into next week, and then we have three central banks. All these news events is going to be a much busy week throughout the week here. So looking forward to it. But let's just do our currency analysis. Let's take a look at where things are and what the charts are telling us. So let's just start with the crypto here. So let's just start with the Bitcoin. And this is what I was discussing earlier, that this is right up against that resistance. So you can see that it's slowly sort of gathering the momentum or the energy here. So at this point, the path of least resistance is to the upside. So as it's staying above that 100K level, and overall, it looks like it wants to go. It wants to rally a little bit higher, and momentum is there with that as well. But now, if you look at other cryptocurrencies, I'm not really seeing the same thing. I mean, take a look at Bitcoin Cash. The score is not the strongest here. Here we are looking at Ethereum. Even Ethereum is not at the highs, and then here we are with the Litecoin. So we really haven't seen other cryptos really catch up to it. I think Bitcoin probably is the best play here. Now, let's take a look at currencies. And this is where we're going to take a look at charts and see if anything has changed. So you can see that the biggest change that has happened is in the US dollar. And you can see that now the trend score has gone down to 0. I mean, we were at +2, +3 for the longest time. But you can see that with this move here, we are right below the 20 and right above the 50, which means that this thing is likely to break either way. But again, there is volatility here, so we could maybe go back and forth between this range. But I think with the score of a 0, we want to be flexible on both sides. But at this point, there's definitely seems to be a little bit more pressure to the downside. But at the same time, if we get some tariffs, I think that's going to, push the dollar higher in the short term. You can see that right now the velocity is down -2. But if you really take a look at this intraday volatility, this is really where, it's not an easier play, especially if you're trading short-term time frames. There's a lot of back and forth. But overall, you can see that it's slowly, gradually pulling back, which again, I expect the dollar, being at this highest level in the last, so many years. I think this is an important level to watch out for. Now, the Japanese yen is the one that I was kind of watching. And you can see that, I know got a -2 here. We are below the moving averages here. But if you take a look at overall, it's not really going higher or lower. So I was hoping to get some more, exciting price action with the Japanese yen. Not really seeing that here. So, we have the markets that are rallying. So that's pushing the safer currencies lower. And then we don't have any catalyst from the Bank of Japan. So until or unless we get some pullbacks in the markets, then I think the yen probably do well. But again, I think yen is kind of going sideways to a bit lower. Now, Swiss franc is another one following the same path. But my doubt over here is this support level. And I've talked about it many times that this is a support resistance level that's been going on for months. So the question is it going to break this time? I don't, even though it's a -2, I don't really love the short until it really get that break. Because once we get that break, that's where the trend's going to turn a lot more bearish and momentums will pick up. But I think until then, we got to watch out for that. But again, we're not really seeing a whole lot of relative strength in this Swiss franc here. I think this is a good underperformer we're going to continue paying attention to. On the other hand, talking about divergence, we have euro that's holding it a lot better, and it's right up against that resistance. So at this point, the trend score is a +2, and we don't have a confirmed breakout yet. But if this breaks out above that resistance, I definitely like it further to the upside. You can see momentum is there as well. And again, between the euro and the Swiss franc, you can see euro is definitely the leading here. But the biggest surprise for this week was the British pound. I mean, take a look at how weak this was. We were definitely, over in the oversold levels, and we just consolidated there. Then boom, there's a big move higher. Question is that, are we ready to break out and retest higher? Well, this is a very bullish candle close, but we're stopping right at those moving averages. So I think we'll probably see next week if it does pull back, or does it actually continue further from there. But again, if you are on those ultra bearish on the pound, I think it's time to scale back those bets. We are right at 0 here, so which means that it could go either way. We just have to wait and see. Now, looking at the CAD, I mean, look at this this downside here. Again, I think there's a lot going on with the Canada, with the tariffs and all that. So I think that's going to put some pressure on the Canadian dollar. Until that's really out of the way, or we get some more clarity, I think we'll probably see this relative weakness in the Canadian dollar here. So we talked about this last week as well, that we think that CAD is going to be the most volatile currency, and it was. I mean, if you take a look at these candlesticks here, we got a massive candle here on Monday, and then Tuesday. A lot of the wicks that are happening on these candles that you got to keep a close eye on, because this is showing you most volatility. And we need to make sure that we are using the right strategy to capture that. So I think this is the one that to really watch out for going to next week. And then we have the growth currencies. And I must say that they actually are slowly carving out a bottom here. They are a +2, but a lot of wicks on this one. So what does that tell me? That they're good sort of things to buy on both pullbacks than the breakouts. And I think that's what we're seeing here. It's not an ultimately bullish trend. There's a lot of back and forth. So this is something that I think likely to continue that way. Again, this week was a strong risk-on week. So that helped the growth currencies here. If that changes, does that Aussie and Kiwi pull back? Something to kind of watch out for. But in the shorter term, you can see that this thing is doing a lot better. It's not making lower lows and getting out of the consolidation. And then here we are with the Kiwi doing the exact same thing. They have been in the downtrend for the last few months, and then they're slowly carving out that bottom here. But again, I'm cautiously bullish, because keeping in mind that the risk trends can change very quickly, we need to make sure we change or switch with that. The markets. And I hope everyone was able to kind of get a glimpse of that volatility this week, on the news headlines. I think that's just going to continue going to next week. And as we are with this trend score, you can see that things are trending. I mean, we have the CAD, Swiss franc yen to the downside. We got the Kiwi, Aussie, and the euro to the upside. So perhaps we can take a look at those pairings. I'm not sure. I mean, I think the dollar and the pound are at some critical levels where it can either, break out or maybe sort of retreat back. So I think those are the ones that I still have to find a bit more confirmation. But, outside of that, I think there's better currencies to pick on the downside, and there's better currencies to pick to the upside. And based on the velocity score, you can see that shorter term, pound was pretty strong, but euro, they're both doing really well. And then we have the CAD, dollar, and the yen. The Aussie's kind of right in the middle here. So, decent moves that are taking place, in the last 24 hours. Now, the question is, does that continue? So continuity is really the thing that we're looking for, and that's what you get on the daily chart, is on the trends, where you get more of that direction, and then velocity kind of tells you what's moving when it's moving. So based on that relative trend weakness, let's take a look at some possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So based on what we just looked at, let's just take a look at, first of all, let's just start with the dollar here. So you can see that dollar on the daily chart looks like it wants to pull back lower here on a 4-hour chart. I want to just show these intraday volatility that you're seeing. I mean, it pulls back, it rallies, pulls back, it rallies, pull back, it rallies. So it seems like dollar has been a better short on rallies rather than selling on those on a down move. So that seems to be what's working here in the dollar. But like I've said that like last week that I don't love a dollar long, I don't love a dollar short. At this point, I kind of remain on the same track here. I don't really love it as a long or a short because of all that uncertainty out there. And I think once that's out of the way, that probably pave some of the more clearance for it. But again, there's other currencies that are definitely more underperforming to kind of pay attention to. So first thing, let's just take a look at Euro Swiss franc. That's the one I want to take a look at because I was watching this currency pair, had this alert out, and you can see that boom, we got a big breakout on this one, and that's a good level of resistance that it really took out. At this point, I would love to see sort of a pullback or sort of base to kind of start playing this directionally. Remember, this thing has been sideways trading between the 93 to 94.50 for almost 3 months. So a good breakout here. Now let's see if this continues to trade in that continuity there. So Euro Swiss franc goes on the top of the list here for a potential. Let's just take a look at other currency pairs. I want to highlight dollar CAD here because this kind of gets to tell you what the volatility was this week. This is a 4-hour chart, and you can see how much of a back and forth that it is. So this is what we have currently in play as far as the market uncertainty goes. And I think that's going to continue until things get cleared. But I like to show this because that way you can strategize better, pick the right strategy for this market condition, because every market condition is different and every strategy works differently in those market conditions. This is a bit of a volatile condition, so you got to understand that anybody that's trading with volatility, either you want to reduce the volatility, you just go on a higher time frame, or if you want to take advantage of the volatility, then you're just playing the velocity chart on that day-to-day basis. So let's just go over some of the other pairs. Again, there's a lot of these dollar crosses are coming in play here. We are seeing a bit of a rally, but you can see that rally is not extremely bullish. We get rallies, pullbacks. So just watch out for your strategy selection. At this point, I think, we can see how things are kind of moving up, but it's not moving up in a very bullish fashion. So it seems like buying on pullbacks probably a better strategy here with this. Taking a look at other currency pairs, let's just take a look at Euro Pound first of all. You can see that this thing, Pound is it's definitely stronger than the euro this week. So this is again stalling right at the resistance, so which is making Pound a little bit better in the short term. Now, if I go into currency pairs like Pound CAD, you can see that it was a nice bounce, nice move off of the support here. So this thing again likely to continue until we see we see a bit of a stalling price action, and I think we'll probably need to see a bit more of a failure in the candlestick. This is still a very bullish candlestick on the day, so I think it's still pretty early to call it if it's going to roll over yet. So we are seeing nice trends in Aussie and Kiwi, but like I said, we want to be cautiously bullish on those ones. Swiss franc is the one. Here's the chart on the Swiss franc, and this is the support I was talking about. So, I like the fact that it's moving lower, but at the same time, I would love to get that break before I can ultimately jump on that ship with this short Swiss franc call. But I think as we're getting closer to that, something to watch out for. And another chart that I want to take a look at is the yen. So let's just take a look at dollar yen. This is the one that I was watching last week, with this Bank of Japan meeting. This is usually the most volatile. And you can see that it didn't really develop much either way. We're still stuck in that range here. So you're trying to figure out which one is better, which one is worse. Pay attention to dollar yen. It's consolidating. Whichever way it breaks first, I think is going to likely to lead in that direction. So in conclusion, I think that intraday volatility likely to continue. We have a ton of data next week with the central banks and economic events. So I think it's going to be the week where you want to just take it on a day-to-day basis, see where the volatility is, where the movement is, and just focus on currencies that are actually moving. I think those tariffs threat, they're still looming. Remember, February 1st was the date that we got. Who knows if that got pushed later too? But again, the more it got pushed, the more relief it's going to provide to some currencies. And so it's something to kind of keep a close eye on. And again, focus on relative weakness. Very important. It's very easy to get lost in that volatility. But remember, volatility could be changing from a day-to-day basis. But then keep an eye on the trend, just so where is the next big move, which way it's really going towards. So we're going to continue trading the markets that way. And we'll look forward to the next week ahead. Thanks for joining here. Have a good weekend ahead. If you have any questions, let us know. Otherwise, we'll be back at it next week. Have a good weekend. Happy trading.